guys, how you going? Look, my question's in regards to foreign investment in particular, but I just want to touch on some comments made earlier today by Stephen Kennedy in regards to tariffs and the way, obviously there's this view that we shouldn't have tariffs, but the fact of the matter is we do have tariffs in this country. We have reverse tariffs in the form of our taxation system, whereby our withholding tax rates are much lower than the onshore tax rate. And then we also have another tariff in the form of capital investment, whereby 128F public offer test basically says that if Australian companies or banks issue bonds in the primary market, that those people who issue those bonds don't have to pay withholding tax. The foreign banks lend into Australia and they don't pay any tax on the interest income that we pay offshore. Surely we should, if we want to get serious about retaining our own earnings in this country, shouldn't we think about abolishing 128F and stop giving the foreign banks a tax break so that we retain our own capital here and reduce the reliance on foreign debt?
I think that question, sorry Senator, but that question goes a bit beyond the scope of macro group. I can ask my colleagues later in the day if they have.
Well, I guess it goes to, the reason why I'm asking it, just it goes to capital flows, right, and foreign investment, because effectively if you've got a higher onshore tax rate, okay, you're not going to receive as much money for your interest. Now, I know through my work experience that we would go offshore. I'd work for Australian companies that go offshore and tap foreign debt markets instead of tapping the debt markets here, because we don't have a debt market in this country, because we have a tax act that literally gives a tax break to foreign investors. So I would have thought this is something that the International and Foreign Investment Group should look at. And I'll use another example of whereby, I've quoted this before. A particular multinational in 2022 made $1.4 billion in revenue, shifted $1 billion of that offshore to Ireland. So withholding tax rate on royalties to Ireland of 10 cents, company tax rate of 12.5 cents in Ireland, 10 plus 12.5 is 22.5. That's less than a 30 cent onshore tax rate here. So there's a 7.5 cent arbitrage on that $1 billion shifted offshore, which gives a $75 million profit just for the sake of doing a couple of journal entries. Isn't this something that we need to be looking at and working with the way that my understanding of his tax settings are actually made or set by Treasury in the first instance. I mean, the ATO has to enforce them and administer those tax rates, but Treasury, this is something that Treasury should be looking at, because we do have structural imbalances in this economy that have been built up over the last 4 decades of, so-called we have to attract foreign debt instead of actually promoting domestic investment and retaining those earnings from that investment.
So we as Treasury are concerned with the overall settings and how that affects investment flows in and out of the country, and what it means for domestic versus international balance, and what it means for our ability to service the investments in the country that we want to see to support future economic growth. So we are certainly concerned with that. My colleagues in Revenue Group, I'll flag that question with them, because they think about this from a range of perspectives, partly international competitiveness, which is one of the areas you've flagged. They look at it from an integrity perspective and issues around arbitrage that you described. Yeah. And obviously they also have to consider things like the overall fiscal sustainability and other issues of equity and consistency with other parts of the broader tax and financial system. So I'm not set up to talk in detail about the measures you've described and the impact they're having. I'll ask our colleagues if they have anything they wish to add. But we are certainly concerned about the integrity of the tax system and how that affects the investment flows.
Okay.
Authorised G. Rennick People First Chermside.